Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Tuesday, March 15th at 9 p.m. Here in Northern California, the market is actually in an awesome place, even though it doesn't feel awesome. It's in an awesome place because it is just hanging out at what I believe to be the bottom of the market. And when we're at the bottom of the market, there are opportunities that you will never have again. I remember back in March of 2020 when the market tanked and Tesla stock was down at $236 a share, or maybe it was $326 a share, something like that. It was an outlandishly low. It was before it split in 5 ways, and a buddy of mine was buying the crap out of it, and I was so disillusioned by the fact that it had plummeted from $900+ that I didn't buy any, which was just so stupid. Anyway, the point I'm making is that we always look back at market bottoms and think, why didn't I? Why didn't I? The problem is when we are at market bottoms, we're scared to death. The one thing that you experience at every market bottom is fear that you're not at the bottom. Every market bottom, you're scared to death that it's going lower. And there's always prophets of doom who are saying it's over, it's going lower, it's going to go lower. Now, first, let me say it's always possible for it to go lower. Somebody said, we're at a place right now where it could go any direction. It could go up, it could go down, or it could keep moving sideways. Well, actually, yes, that's always true of the crypto market. That is never untrue of the crypto market. It can always go up, it can always go down, and it can always move sideways. So that does not move us. That does not dissuade us in any shape or form. But what is important at moments like these is to make sure to use these opportunities to set ourselves up for maximal profitability for the days and even years to come. Now, I've found for myself that there are 2 important ways to do that, 2 powerful ways to do that, really. The first is to make sure that I have a formidable portfolio. And my personal portfolio has 33 assets that I have carefully chosen based upon fundamental and technical analysis. Those 33 assets, for each of those assets, I have buy up to levels and I've got take profit levels. Take profit levels that I will probably revise once the market gets going in the next wave up. Revise one way or another, either by raising them higher or lowering them, depending upon what I see happening in the RSI and candle patterns as we move up. But in addition to my solid portfolio, I have leveraged trading positions. I trade on Primexbt. You can join me. There's a link in the description if you want to trade with us on Primexbt. We do that at the gold and higher levels of my Patreon. Now, my particular strategy is not day trading and it's not swing trading. I'm not trying to do multiple trades a day. I'm not trying to do multiple trades a week. I'm not even trying to do multiple trades a month. The concept of position trading is simply to set a position at the bottom of the market, and then as it goes up, as the market moves up, raise the stop loss and add new positions. So you start at, say, 3x leverage, the market doubles, you raise the stop losses and double the leverage. The market doubles again, you raise the stop losses and double the leverage. And so the concept is creating multiple levels within which to add leverage but raise the stop losses so that if the market turns around and tanks, which it can do at any time, you don't stop out. When you do stop out, you're simply locking in profit. And what I found last year when we were doing this, we were up 4,000% at the top of the run that ended in May of last year. So I know that this works, but I feel like the market is now situated for that next leg up. And so we're simply establishing our position, our beachhead at the bottom of the market. Now, the reason why we jumped back into this, notice that I was not doing any leverage trading for the last 6+ months simply because we were waiting for the market to bottom out. Actually, I take that back. We did a little bit, I think, in October. But we stopped pretty quickly simply because the market had not yet bottomed out. But now I believe we're at the bottom of the market. And so those are the 2 opportunities that I see. Number 1, making sure that your portfolio is set. And then number 2, taking a little bit of money. And we're just doing this with a couple of $100 that has the potential to become $20,000 or more if we're truly at the bottom of the market, and the market truly begins to move up from here. Now, the beautiful thing, we turn to this Bitcoin chart, the beautiful thing is that, because I use the weekly chart, when the market does move and the market starts to move up powerfully, the question is, how do you know when you're at the top of the market? Well, the RSI on the weekly chart telegraphs that for several weeks, even a few months. Now look at this Bitcoin chart. I've showed you this many times before, but I think it's so important that this was the top of the RSI on January 4th. This was not the top of the price, right? January 4th, we were at about up top of that week, we hit 39,000. The RSI topped out. We didn't know that yet. We didn't know that till we made a lower high. This was on February 15th, 6 weeks later, almost 6 weeks later, about 5 weeks later. But notice we were at a higher high in the price and a lower high in the RSI. That's called bearish divergence. By the time we made the third lower high, and we'd still made a higher high, it was absolutely certain that we were nearing the top of the market. Then we made a fourth or a third lower high, and we were still moving towards a higher high. It was at this point where we saw this third lower high that it was clear that the bull run was ending. Now, this is the key. Where is it? There it is. If we look at this, from the top of the RSI to the third lower high was 91 days. The market telegraphed this move down for 91 days. For 91 days, the RSI was screaming, the end of this bull run is upon you. It's not going to break higher. And I'll never forget, I was making a video this day when it was up here at 64,700. And I think it was at 64,500, like something like that. But it was up here near the top of this candle, near the top of this wick. And I was making a video and I said, guys, look at the RSI. We're not even going to make it to 65,000. And sure enough, we did not touch 65,000. It turned around from there and moved down. The point I'm making is that when we get to the top of this market, the RSI will start telling us a couple of 3 months ahead of time. When the market starts to move, what in our minds and hearts, the market is like this lightning. It just explodes and then crashes within 45 minutes because that's what it feels like. If you're not looking at the RSI, this candle right here and these 2 weeks in which Bitcoin loses 50% in 2 weeks, it feels like it came out of the blue, out of nowhere. But if you're following the RSI, you realize that those 2 weeks were 91 days in the making. Those 2 weeks had been telegraphed by the RSI for 91 days. And so now it's very possible that the RSI has hit bottom and now is trending upwards. Now, how will we know? Well, if the RSI breaks down and goes lower, the price will break down and go lower. And if that's the case, then we still need to find the bottom. And we're going to keep working until we find the bottom. But I think there's a good chance that for Bitcoin, the bottom is in. I think there's a good chance for the altcoin market, the bottom is in. And here's what I see. Looking at this Bitcoin dominance chart, now there's conflicting indicators here, conflicting indicators on this chart. Let me open the divergence chart. Can you see that? We're making higher lows in the RSI and lower lows in the price. So that is regular bullish divergence. Hidden bullish divergence would be higher lows in the price, lower lows in the RSI. The thing to remember is that whenever there is a divergence in the RSI, the divergence in the lows between the price and the RSI, it's always bullish. A divergence in the highs between the price and the RSI is always bearish. The highs go up in the price, the highs go down in the RSI, that's regular bearish divergence. The highs go down in the price, the highs go up in the RSI, that's hidden bearish divergence. Okay? So whenever the highs diverge between the price and the RSI, that's bearish. Whenever the lows diverge, that's always bullish. Now, coming back over here to this Bitcoin chart, this Bitcoin Dominance Chart, what do we find? The highs are diverging and the lows are diverging. What is that? Right? So the lows are diverging, which says it's bullish, but then the highs are also diverging, which says it's bearish. So you got lower highs in the price, higher highs in the RSI. That's hidden bearish divergence. But then you got lower lows in the price, higher lows in the RSI. That's bullish divergence. First thing I'll say is that hidden divergence tends to be more accurate than regular divergence. The hidden bearish divergence tends to trump the regular bullish divergence. That's the first thing I'll say. The second thing I'll say is if you look at this candle pattern, it's a bear flag, a huge bear flag. And so what I've been expecting Bitcoin to do, Bitcoin dominance that is come up and hit the top and then come down. And this is another alt season right here. Okay? That's what I'm looking at, is another alt season like this one over here. When Bitcoin dominance drops in alt season, basically, whether it's a miniature alt season or a huge alt season, that's when the alts go crazy. So for instance, over here, when we saw Bitcoin dominance drop by 63%, that was a huge alt season. And when did this start? I mean, we could say it really started over here. It's April of 2017. And the bottom of it is January 2018. That's that alt season, right? And we saw it in two waves. This was wave 1, and then this was wave 2. And then there was a little miniature recovery in the middle. And then all of a sudden, Bitcoin starts to grab the market capitalization, and it increases by 108% until it hits 72%. So on December 28th, 2020, Bitcoin was 72.3% of the market. Right now it's sitting at 43.45%. What I'm expecting is not Bitcoin to tank. That's not what this drop in dominance is. It's not when Bitcoin tanks. It simply means that the altcoins explode at a higher rate and a faster rate than Bitcoin. So Bitcoin dominance can drop even if Bitcoin is going up. That's something we have to keep in mind. It's simply dropping because the altcoins are going up at a faster rate than Bitcoin is going up. And that's simply what I'm expecting, is the altcoin market to explode at a faster rate. So there's altcoins that I think are going to 10, 20, 30, 40x. Bitcoin may 3 to 5x at best. Is Bitcoin solid? Absolutely. But I think the altcoins are going to do better. All right, I'm droning on and on in this video. Let me stop here. Let me just say, I want you to remember that this is not financial advice. And I'm not a financial advisor. I'm simply giving you my perspectives. I'm telling you what I see in the market. Please make your own adult decisions using your own adult brain. Second thing I will say is thank you for watching. Do me a favor and hit that like button if you wouldn't mind. And hit that subscribe button if you haven't done that already. I love your comments. I appreciate them. Feel free to drop me a comment. And last thing I'll say is do everything in your power, especially in this market, to sleep in peace, wake in joy, and walk in love. And that's the goal of everything that I provide, every resource that I provide, every video that I provide, is to help you sleep in peace at night, wake in joy in the morning, and walk in love during the day. I hope it helps. With that being said, this is Cryptogenic signing out.